welcome to this very special Muhurat Trading session that we have to mark this auspicious occasion of Diwali. From me, Aisha Faridi, Avan Dapash, Nikunj Dalmia and Siddharth Bhamre here is wishing you a very happy Diwali. Thanks for keeping the faith, thanks for staying invested, and the message this time is just keep sipping, make it a safe as well as safe Diwali.
Yeah, but please remember that Diwali tradition started before stock market actually came into origin.
Yes.
So Diwali is also about festivals, mithais, spending time with the family. Now, Siddharth, the challenge is that when we did yesterday's show, Aisha and Avan, they were looking absolutely gorgeous. So are they looking better today or were they looking better yesterday?
Well, they've just upped the mark, I would say that. And fabulous.
Thanks,
Aisha,
guys.
and
You guys are looking
beautiful,
equally
Avan.
dapper. So, yeah, but as you said, it's about the markets and it's about festivities as well. So, let's hope that there's some sparkle on the screen today.
Yeah, we really hope so. This with Diwali, we thought of taking things a notch higher and doing things a little differently since it's been a tough past few months. And, like Nikunj was just highlighting, Diwali is not just about what you buy or sell, but it's also a time when you look back and reflect at the year gone by and crystal gaze for the year ahead. It is time when we go back to the drawing board and chart out the next course of the action for the new year ahead.
So it's time. We thought that we'll give you, our viewers, a complete 360-degree view of what to do, what not to do. What should you do with your stock market holding? Should you buy them? Should you sell them? And more importantly, that at a time when volatility is back, how should one differentiate between volatility and risk? So what is Sahi this Diwali and how can you really save this Diwali? Okay.
So let's begin by telling you what exactly is Sahi, what is safe. And Sahi is really, don't be scared of this fall, this volatility. Save is, of course, diversifying your risk portfolio. So let's take a look at the year gone by. It's been a little tough. While the index has moved up about 4%, that doesn't really give you the clear picture. Remember, it's the small cap index which has also seen a decline of about 22%, while the, white knight in shining armor has been the DIIs with a 1,25,000 crore rupees worth of buying. FIIs sold nearly $3 billion in the month of October alone. And I think the learning, Nikunj, in the year gone by has really been the get-rich-quick syndrome of 2017 has really got busted this time.
Yeah, I mean, where we were last Diwali versus where we are right now, realization has come back. Realization is that equity markets inherently are volatile and we must respect the volatility. You must differentiate between risk and volatility. The lay of the land last year was very different and the lay of the land in next 12 months would be radically different. So I guess what really matters in this kind of an environment is to keep the faith, both in terms of patience and perseverance. Remember, Nifty has given a CAGR return of more than 15% in last 10 years, which means your money has doubled. So whereas we can cry over the small cap stocks and what a gut-wrenching fall it's been in some of the small cap stocks, but what really matters in equity market is that the terrain is changing. You need to understand the regime in next 12 months would be very challenging. And when the environment is challenging, the best way to really protect your capital is to diversify, diversify and diversify.
But the only thing, Nikunj, is that, it's not like it's all blue sky and clear zone for the year ahead. You've got a lot of important domestic as well as global events lined up as well. So you don't know whether, while it may be okay to say that maybe we're out of the woods after the recovery that we've seen from 10K all the way to 10,600 thereabouts on Friday, or rather just yesterday. But will the volatility go in a jiffy, or will we have to see this excruciating high and lows of the market which will continue for the next 1 year? That I'm not quite sure about.
No, I think volatility is back and volatility is here to stay. The nature of equity market is that it is volatile, and a very basic premise is the reason why equity markets are the reason why they're volatile, they give you better returns and higher returns. I guess that is something what we really need to focus on. 2017 really spoilt us with low volatility, and now we've come back to really real levels as far as volatility is concerned. Now, volatility and risk are two separate things. Volatility will always act as an investor's friend if you know how to understand volatility. So stock prices will go up and down, and the differentiation will actually start kicking in. But like they say that it was a rising tide syndrome 3-4 months ago, everything and anything went up. Now the tide has turned and you're figuring out that what is good and what is bad. So you will see a lot of differentiation going forward in next 12 months. Where sliver of the market will move higher, sliver of the markets will not go anywhere, but large part of the market actually will be moving to news flow and depending on flows and where the global market positioning is.
And also at a time like this, if you're saying that the next year is going to be sparked with volatility, given the fact that we've been so spoiled last year, I think one thing is also going to be that all of the investors, it's the message that we at ET now are really pushing and are driving home a save Diwali, which means that now is the time to put your money. Of course, you need to be careful where you put it, but really stay put and ride out the game as well, not really get deterred by that. Those returns that you're seeing as well on your screens as to how we've performed from last Samvat to this Samvat, which have been some of the key mid-cap outperformers, which have been the stock that have taken a hard knock as well, have eroded quite a bit of wealth for investors. All of that needs to be closely monitored as well. Just take a look as to how we fared compared to the rest of the globe. No doubt the market that has done exceptionally well from last Samvat to this has been the global market of Brazil. You also have Russia, which has performed quite well. The US markets, we saw a lot of key events coming in, a lot of startling comments as well by US President Donald Trump. But despite that, the Dow Jones has gained something like 9%. I think what's definitely going to be on minds of investors now is going to be the midterm elections. But other than that, we've not done too badly vis-a-vis the rest of the globe. 8% for the Sensex, the Nifty has gone up about 4%, and we've outperformed the Nikkei, the CAC, the Hang Seng, which has been down about 8%, and even the European markets like the DAX, which have shaved off something like 11%. So, Siddharth, while we haven't done too badly from last Samvat to this, there's lots of factors that are really playing on the market's mind as well. In terms of what Aisha was talking about, whether or not this sort of choppiness is going to continue, is there going to be a clear skies and recovery ahead?
Well, a lot of things have changed in last 1 year, especially from positioning perspective. So what we have seen that this market only saw formation of long positions. There was hardly any short positions. A return of short positions have, that has made a mark.
That's an understatement.
Yeah, it's a mild way of putting it that there are more of short positions now. But then if you look at last 2-3 years, Aisha, Nikunj and Avan, we didn't see these kind of short positions. It was only, okay, it's a buy on dips market and you kept buying this market and there were hardly any corrections. Nikunj was pointing out volatility made a comeback, and that's right, because if you look at, yes, markets are volatile, but if you look at the figures, then now IVs are not dipping to 10%, 11%, they're staying at 18%, 20%, and that's the new norm which seemed to be the case in last 1 month or so. Also, important point over here is the fight between FIs and DIs continues. Now, we always say that there's a lot of money which is coming in form of DIs into this market, which is right, and that's the reason despite so much of selling by FIs, our markets have continued to outperform global markets. Yes, you would argue that currency had played an havoc, but again there too we have outperformed, and it's not like 2013 where we were part of fragile FI and currency issues were a problem. And banking sector, we used to always feel that if banks are doing well, then this market would do well, and retail banks are untouchable in the sense they will never correct, and market has showed you that that factor has changed. Today it's not banking stocks which are leading this market higher, there are a lot of other names which are doing well. So all in all, if you look at this last 2-3 months and if you combine with the entire year, the texture of market has changed. It is no more just any dip is bought into. There is now selling on rise which is also taking place, and a lot of factors have changed in last 1 year. So I believe this coming Samvat, at least starting 2-3 months, will not be as easy as it has been in last 2-3 years.
Well, for me, I guess 2018 or this Samvat year really has been nothing else but a year of normalization. Equity as an asset class is inherently volatile. 2017 spoilt us. The regime at central, the global low liquidity regime is changing, and that in a sense is going to have an impact on the way how we would measure risk and how we would measure volatility. I guess for me, the differentiating factor for what will make you a successful investor and what will differentiate you as an outperformer are just 2 words, and just underline these 2 words: risk and diversification. World has forgotten the importance of risk, and we've lost the importance of diversification. These are the two pillars. If you apply them for this Samvat year, I think you will have a huge scope to outperform. Ajay Srivastav, happy Diwali. Thank you for joining us. When we started the last Samvat year, it was all, big bang indications coming from the small cap space. In Diwali terminology, it was all, firecrackers all the way. But this time around, things are not looking all that great. And my sense is that rather than talking about how much we've gone down more, I guess we need to apply two basic mantras of investing: importance of risk and the need to diversify.
Well, I think we wish you all your viewers a very happy Diwali. I'm quite sure it's a little somber Diwali for most people, but well, whatever it is, we have got to take it and move forward. But I think, you're right, partly speaking, that risk is on the horizon. Risk is always there. I think that's the thing. I think, Nikunj, contrary to what you're saying, I think diversification is what killed this portfolio, because if you were concentrated on large caps and if you're concentrated on a few stocks or few sectors, you could do well in any market, including this market in the past 12 years. What happened was the portfolios, or when we diversified them into mid caps and small caps, that's the time when the damage started to come into the portfolio. So if you look at the end of the year, where the damage has come from most, that's where the damage has come from more. And now the lesson for the future, in fact, just a little different than what you're saying, is our lesson in the future is that this is a crucial year for India, because we have a big national elections coming. I don't think so much is going to happen in the festival season. By and large, it's become pretty ordinary. So we're not going to see any great results coming in the January and for this quarter at the end of the year. So what are you really aiming for? Where should your portfolios be? What we are saying is, it's an election year. What couple of things happen in election year? One is huge amount of spending, and I'm sure Aisha has got a grin on her face when I say liquor industry. There are 3 stocks. There's going to be, in an election of this magnitude, which India is going to inform, plus which is very, very going to be competitive.
You know that you're maligning
which is the one
me.
commodity bought most, liquor.
Ajay, happy Diwali first of all, and thanks for this public announcement on national television.
Thank you.
What is that he knows? I don't know.
I don't know. I really don't know. It's a Delhi thing, I guess.
Nilesh Shah, you may be, let me encourage you also to, participate in this conversation. Nilesh is quiet, Ajay. I need to get him in the conversation. He may not react to what you indicated right now, but I have to start by wishing him happy Diwali. Nilesh, happy Diwali to you. Okay. So, Nilesh, what do you think the next Samvat is likely to be? Do you think it is going to be better than this year?
Broadly, we need to be lucky, sensible, and planning for next Samvat. Luck in the form of lower oil prices. If oil prices goes higher from current level, it could have impact on next Samvat's return. But if oil prices drop from current level, then next Samvat will certainly be more prosperous. In terms of sensibility, we have to vote for a government which is stable, which is committed to economic reform. If we indeed get a stable government with economic reforms as agenda, next Samvat will be prosperous. If we get a coalition government not committed to economic reform, then certainly next Samvat's returns will be impacted. The third factor is that we have to plan for future. Today morning, MSCI has announced that A-share indices weightage will increase from 5% to 20% in MSCI EM indices. From MSCI emerging market indices, it's going to become MSCI China and other market indices. As China's weight jumps from 28% to 50%, correspondingly India's weight comes down, and correspondingly FII's allocation to India starts dwindling. We believe if we don't take any corrective action, there could be potential outflow of almost $100 billion over next couple of years, not necessarily next Samvat year, but over next couple of years due to MSCI rejig. Now obviously we must plan and take corrective action so that while China's weight increases, India's weight does not decrease disproportionately. So if we are lucky, we are sensible, and we are planning for future, the next Samvat's return could be reasonably good.
Ajay, I guess a broader question we need to address and answer is that should we respect the fall or should we buy the fear? Ajay, this currently it's not about, which stock has fallen 5%, which stock has fallen 20%, where there is value and where there is, froth. I guess the broader question is that should we recognize that the regime for equity is getting tough, and if the regime for equity is getting tough, is it important to, let's say, move to other asset classes? Is it important to diversify? Is it, is it high time that, we start talking about a liquid fund and start talking about a balanced fund now?
Well, certainly, I think that's a very pertinent question, and that's a very important part to realize that equity is not going to be such a spectacular return format in terms of the structure of the market. Because, look at our economy. We're not going to grow 8 to 10%, it's very clear. So our Indian growth rate is not going to be this thing. Political instability, now we may have different views whether stable government is good, coalition has been done well for India, and which will do better or worse. But the end of the year is, the fact is that 6 months will go into electioneering, and I think the debate with the RBI is that now it's a kitchen sink onto the economy, that take the 3 crore rupees, the lakhs of crores, and put it in the economy at this point of time. So I think with so many variables hitting us, oil is one issue. More important than oil even is regulatory overhang. Every day you get a new regulation. You saw what damage ASM did and the new guidelines. So I think given the whole setup that we see today, which is a little more confrontational setup, little less stable, we don't see a policy being stable for the next 6-9 months at this point of time. Too many interventions, too many points. You would tend to be careful where you put your money in a background where demand is not picking up. So I think at the bottom line is, if demand is not picking up, economy is not growing, the rationale and interest rates are at 8% in fixed deposit, the rationale for equity that much gets diluted. And which is why we are saying for all our customers is that this is a time when you're talking of 40 to 50% in cash or debt, or put in fixed deposit, or do whatever you want with the money, and only 50 to 60% you keep in equities. Wait a while, focus on few sectors, let this election process run through it, and then we will see what we are, where we are for. And, the background also is that, we may say that DIs have done a great job, we've done a great job, India has invested, but we also lost a hell of a lot of money for Indians at the end of the day. The FIs took the money out, and they are smarter than we were when DIs have put the money. Now we now need to compensate these investors for what we have done for them for the last 2 years. And I think the compensation is now realign ourselves to the new economic reality of low growth, uncertainty, policy framework being volatile, and plan for just few sectors. I think this is a time where the fund managers to pick up and say, this is the sector I want to call, not put money in every sector and say, hope for the best.
Where is it that you deploy this 40% of cash that you're sitting on right now? Is it the usual suspects, which is almost getting an overcrowded trade, the corporate banks? And do you think the journey for them, especially going after the earnings, what we've seen from ICICI Bank, what we also saw from Axis just in the week gone by, do you think the journey for them has just about begun? And there is still opportunity for many to jump in?
Of course, there is an opportunity, and I think that's because they're re-rating. They're low price, so they're re-rating. I think if you look at the sectors, for the economy, the tractor industry is going to boom. You'll find Jeeps industry is going to be booming. SUVs are going to be bought. Election year, we spoke about liquor going to be bought. I think you need to focus and say in election year what happens. Which sectors are going to make the maximum money on the demand side. Everything else is going to be on the sideline. It's going to be focused on sectors determined by money power in the election, which is going to be bought, buses, trucks, Jeeps, tractors, because rural money will come in. Just focus on sectors. Liquor, as I said, is going to be the biggest focus, is going to be the biggest beneficiary of elections, and stay quiet. Big banks, just go for it. And again, back to the point, do not buy indebted stocks. Do not buy the leverage storage. Do not buy with foreign currency loans. Do not buy small cap, mid cap. There's no hope for them. You don't want to be with them for the next year. Keep it very simple. 4 sectors we just discussed, and I think that's where we are putting our money in. And the last point was mid-cap IT sector. I think they will outperform not because of the performance, but because I think you will have a very strong M&A market in the next 12 months for these companies.
All right, with that, thanks very much for giving us a sense as to what exactly is the outlook in the next Samvat as we're stepping in, and in terms of as well where one should look to align their portfolio. But let's also bring on board then our technical guests who are dressed in all their finery as well this Diwali. Siddharth, we have Kunal Botra as well as Dr. C.K. Narayan joining in our studios.
Yes, and Manas Jaiswal is also there, Avan, and very good afternoon to you, or I would say good evening, gentlemen, and very happy Diwali, Kunal, CK, and Manas to you too. Very happy Diwali. CK, coming to you first. We will, keep discussing about this somewhat to next, and we have, spoken about which stocks you're liking in the other shows. But it's all about what's going to happen next week. And how are you seeing markets shaping up? Because we have seen some consolidation, which we can consider that's good after a nice week we had. And let's also discuss one great stock idea, not from somewhat to somewhat, but probably for next 1 week.
Well, good evening, everybody, and once again, season's greetings and a happy new year ahead of us. And if you look at, on a somewhat to somewhat basis, then there is good news and bad news. And the bad news is that, it's only one out of the past about 15, 18 years that we have had a positive close on a somewhat trading, on a Muhurat trading time. And the good news is that it was in 2008.
I thought for a change you'll say something non-market. Let me remind everyone that Diwali stock market started much after the Diwali tradition. By the way, why are we celebrating Diwali? What is the story?
Ram ghar aaye the.
Lakshmi ki puja kyun hoti hai?
We'll find out.
We'll find that out.
In a bit from now. But yeah, you were saying, CK.
Yeah, the thing is that we would look for, like I was saying, the good news part is that 2008, which was a pretty bearish year, that was the year you had Muhurat doing pretty well. 6.27% was what it was up on the Muhurat day. So 2018 has been a bad year so far. So let's hope we have a repeat of a 10-year cycle and look forward to it. SGX is already suggesting that we are going to have an up. And I think L&T is a stock that I have spoken about before. And I continue to like it even for a short term, even though I mentioned it earlier for a longer term. I still think with a week in mind, L&T still looks good.
Okay, L&T is a buy call from short term perspective, and even on longer term perspective, CK is bullish. A lot of our fundamental experts have been, talking about how return of L&T. In fact, Sandeep Sabharwal, we were talking just yesterday, and he was mentioning about this stock can give decent returns. Kunal, even you have L&T as a buy call. Now I understand everyone is bullish, but if you just look at charts, 1400 has been a very strong resistance, and I can say for entire 2018, this level has not been breached. Do you anticipate the breach of that level anytime soon?
First of all, a very happy Diwali to all of you as well as all the viewers of ET Now.
Thank you.
Talking about L&T, yes, I believe that L&T should take this leadership role. And what we've seen the last 2 weeks, the kind of price performance from L&T and the leadership coming back into that stock, high correlation as well. I believe that this 1400 level should be breached. So from an immediate perspective, 1405 is the target which I'm eyeing on L&T, and stop loss to be kept at 1345.
And the other large cap, which everybody is having a consensus buy call, and both technically as well as fundamentally, is ICICI Bank. Manas, very happy Diwali to you. And ICICI Bank is a stock which you are suggesting to our viewers as a Muhurat trading pick.
Yes, Siddharth. First of all, happy Diwali to entire team of ET Now and all the viewers of ET Now. So ICICI Bank is definitely a clear buy now, because here the trend is clear. Stock has started making higher tops and higher bottoms. Stock is trading above the resistance of 240, because I think just a few weeks back it broke the resistance of 240, and now the target of this breakout comes near to 385 to 390. However, if you're talking about say around 2 to 3 days time, then I think you can expect the target of around 375 in ICICI Bank. So for very short term, definitely one can create long position here with the stop loss of 340.
Nilesh, Diwali is also occasion to start new things. We've been championing the cause of SIP. The challenge is that if you really started, if you've taken a first step towards SIP, let's say 12 months ago or 15 months ago, it's not been a very gratifying experience.
Definitely, compared to last Samvat, this Samvat valuations have corrected. On 16 Jan 2018, BSE small cap index was trading at 33% premium to its 10-year historical price to book average. Today it's trading at 4% discount. So what was available at a premium is now available at a discount. what was available on regular price is now available at reasonable price. So it makes sense for investors to start investment in equity. More importantly, since I said there are events like oil, election and MSCI emerging market indices, it makes sense to invest on an SIP basis rather than on a lump sum basis.
Yeah, that seems to be the messaging all across. But Nilesh, mostly returns follow flows in the mutual fund business. Are you surprised, and do you think maturity by Indian domestic investors will continue? And are they going to continue to invest despite low returns in the markets? Will SIP flows continue like they were coming in with a gush all of 2017?
I think the investor maturity has come of the age. Over last 25 years, they have seen various downturns in the market, and one message is very clear: if you continue doing your SIP, eventually your returns are good. The persistency has paid, and more credit should go to thousands of distributors, advisors who have been reaching out to their customers. In this Diwali season, I am seeing so many of my mutual fund distributor friends who are reaching out to their clients in this holiday season, and they are convincing them, they are hand-holding them, they are cajoling them to continue their SIP. This combination of investor maturity and great work done by mutual fund distributors is resulting into stronger flows into domestic mutual funds.
Stay with us, Nilesh. Lots more to chat about. But Nikunj was just talking to us, quizzing us rather, about the significance of the gardens.
Maybe he would know. CK, why is it that we pray to Lakshmi on Diwali? What's the connection?
Well, it is a new year, right? And then that is a day of renewal of all your expectations and seeing aspirations. And it's a day when, following this, I mean, just ahead of this is a small ceremony where you invite, particularly the ladies, invite other ladies. And they offer what is called as Haldi Kumkum. And the expectation is that when ladies all around you visit your house, one of them who will visit your house is Lakshmi.
Nikunj, where is our invite?
And so please remember
Ladies
that South
invite
Indians, they celebrate Diwali in the morning, we do it in the evening. So he's talking about different tradition.
But we all
completely.
need Lakshmi.
I'm sure, Nikunj, you have an answer why we do
But we
that.
get the money in the morning, doesn't leave much for you guys in the evening.
No, my sense is it's the harvest year. My sense is that Diwali, coincides with the arrival of the fresh crop. Remember, we are a service-dominated economy right now, but we were in a agrarian economy, and everything
That's more of
centered around.
Baisakhi and all that.
Yeah, I mean, this time also the cotton crop comes in, and especially North India. So
Generally,
that's
most of
natural.
our festivities
So let the
are around
master
harvest.
speak for himself. We've got Amish Tripathi, who's a very well-known Indian author, known for his novels like The Immortals of Melua, The Secret of the Nagas, The Oath of the Vayuputras. Let him explain why exactly do we pray to the goddess of wealth, that's Lakshmi, on Diwali.
Hi guys, my name is Amish Tripathi. I'm the author of the Shiva trilogy, the Ramchandra series and Immortal India, and I've been asked to speak on the occasion of Diwali. This is the day when Lord Ram had returned to Ayodhya, and many of the Ayodhya citizens had of course welcomed back Lord Ram and Lady Sita and Lord Lakshman it was the first Diwali of course, and they had welcomed him back with diyas, with the festival of lights. But in Diwali, we also worship Goddess Lakshmi. Now, many of us think that Goddess Lakshmi is actually the goddess of wealth. That is only partially correct. Goddess Lakshmi is actually the goddess of abundance. And I'll come to that in a moment, that what that actually means to how we should understand Goddess Lakshmi. But we are one of the last surviving major pagan cultures, and we actually worship the goddess of abundance. So for us to have a negative attitude towards money, or follow the kind of socialist policies that we followed as a republic pre-1991, is actually completely antithetical to what our original culture actually is. We do not, in our original ancient culture, which actually exists among most Indians today, we do not see money as something negative. It is of course a source of good. Having said that, When we see Goddess Lakshmi as the goddess of abundance and not just the goddess of wealth, we will understand the sense of balance that we must have about wealth. Because abundance is not just about wealth, abundance is about peace of mind, abundance is about happiness, abundance is about calmness in your heart. And how do you find that abundance? How do you find that balance? And here's the thought that I want to leave with you, a thought that our ancestors had. That the pursuit of wealth is of course good, but to make it an end in itself is not good. Wealth exists for a purpose, and if you're just going to hoard it and spend it only on yourself, then that wealth will actually turn into a source of negativity for you. Turn that wealth into a source of abundance in your life. Keep what you need for yourself and for your family, but pass it on. Help others as well. Wipe a tear. Spread education. Feed those who are hungry. You'll find that the pleasure that you get in your heart when you use your wealth for something positive will be far, far greater than the pleasure you would get in just earning that wealth. And that's what our ancestors were trying to tell us with the tradition of the worship of Goddess Lakshmi. She is, like I said, the goddess of abundance. Abundance not just of wealth, but abundance of mental peace, abundance of happiness in your heart. And you can find that only when you use your wealth for the good of others as well, not just for your own good. That's a thought I want to leave with you. Hope you guys have a wonderful Diwali. And I hope Goddess Lakshmi and Lord Ram bless you with everything that you need, and so that you can help others with what they need as well. Take care. Happy Diwali. Bye.
Not just wealth, but goddess of abundance.
Exactly, and but what a lovely explanation as to what this real secret message behind Diwali is. There you go, guys. Roll up your sleeves for the first rate of a new Samvat. We roll over from the old Samvat to the new Samvat. It's traditionally an important, in an auspicious moment where the old brokers, their families, they come and they punch in trades. And the first rate for the new Samvat are Happy New Year, 81 points higher for the Nifty, 81 points higher for the Nifty. Sensex is also off to a good start. It's a good, clean, strong start of 270 points. And so Bank Nifty, the Sensex and the Nifty, all the three benchmark indices are off to a good start. So well begun is half done, so I'm keeping my fingers crossed. But yeah, the Samvat, or the new Samvat, has started with some style, with some grandeur, because across the screen there is a sea of green. Asha?
And that's what you want to see. I want to really say touch wood to this screen. May we see this kind of screen on a daily basis. I know today is only those customary auspicious trades that you put in, so it's going to be very low volume trade really, but hope that we can make it to that 10,600 mark and just push it just that little bit higher, as we did in Monday's session. Got that close and then receded from there. But so far so good. I guess it will be the usual suspects that you will see those moves coming in. Vedanta is holding up today. I want to see what ICICI Bank is up to. Then what a Yes Bank as well is doing, what an L&T is doing. These really seem to be the darlings of the street right now, or for that matter an Axis Bank and even SBI after its earnings. While yes, there was a stark trade the day its earnings came out, you saw the stock jump about 3%, then receded as well that much the day after. But really, these are emerging as the strong quality names which the market is favoring right now. And how can we forget the biggest wealth creator? Those two names actually, both TCS as well as Reliance Industries, from last Samvat to this one. I just want to see what they as well are doing and whether they're continuing to push harder. Definitely on Reliance Industries, about a 0.5% uptick there. And then the TCS as well, which has really been one of the big wealth creators, that as well goes up by about 0.5%. But Avan, what about the problem to some, that's small and mid caps?
Well, thankfully today we can touch wood again, Aisha, because we are seeing quite a bit of green on the screen. 10,600 as well, so what we were hoping for has come, so we can officially say that it's a crackling start despite all of that apprehension that is definitely still prevalent on the street. for today, an auspicious trading day. You have that magic figure of 10,600 that was hit very briefly, and now we're flitting around that point. And it's a healthy advance decline ratio as well that you can see. The problem, Tusum, isn't really splitting hairs right now, because the mid and the small cap indices are up. It's up about 0.7%, so you could say pretty much in tandem with the frontliners. Remember, investors have really burnt their fingers and really licking their wounds when it comes to individual stocks from the broader end of the market. So I'm going to start off by what's lighting up the screen today. Let's pull up Infibeam, that's having a solid run. Big problem stock of this Samvat to last Samvat to this, pardon me, Vakrangi is showing you a little bit of fervor today. You've got something like J Kumar Infra that's very active. Moil is quoting at 182. South Indian Bank is in the green. Quest Corp, Apar Industries, Heidelberg, HCL Info, NBCC is pretty active in trade today. You've also got a green ply, which is firmly in the green. So those are some of the stocks that are holding out. It's names like Thermax, Voltas, Shriram City, Ashoka Buildcon that aren't really playing catch up, and Bombay Dyeing as well is at 106. But Siddharth, let's talk about what's holding out in the green on this auspicious trading day, shall we?
Well, markets are in green, and generally we do see that market open up in green and there is profit booking. But I doubt in today's trading session we would see profit booking, because we just spoke about this Samvat to next Samvat and how the broader trend is. But if we get into nitty-gritty of market, European markets are up by 1%. We saw a positive close to Dow yesterday, and today too, Dow futures are up by 158 points. So traders who are looking from day-to-day perspective will not probably, if they are trading today, won't see much of correction in market. Coming to the stocks, if not gold, then at least gold-related stocks like Manappuram, PC Jeweler, Titan. These are the stocks which are doing well in today's trading session. We are seeing some of the mid-cap names from infrastructure space like NBCC and Sri Infra are doing pretty well. We are also seeing some of the private sector banks like Yes Bank, large cap names like Infi. These stocks are making a comeback in today's trading session. Of course, as Aisha mentioned that there won't be much of volumes. Some correction in Volta Street was not impressed by the numbers, but Nikunj, Aisha, we are not seeing much of action after opening.
Frankly, today it's not about this adjustment, that adjustment. The trades are so token, the trades are so minuscule that the right price discovery is not going to happen. When I had the opportunity of going to BSc a couple of years ago, it's just one of those days you want to come with your family, say hello to each other, just change greetings and festivities. Today it's about, that this is a tradition we've just taken forward, because ring trading has migrated to electronic trading, but the tradition of that Diwali ring is still being preserved. So it's all really about this auspicious trading where you just want to buy some token stuff. So I don't think today's price discovery, I don't think markets today are reacting to crude, or markets are reacting to what's happening to midterm polls in America. Sandeep Sabharwal, the word which we use rather loosely on Diwali and in and around Diwali is that what are the Diwali picks, what are the Muhurat picks. So what is your Diwali idea or Muhurat pick?
Yeah, hi. Happy Diwali to all of you and all the viewers. I believe that from here till next Diwali should be a year which investors would ideally celebrate, as we've gone through a tough phase over the last 1 year, not because of something which went wrong in India, but I think global macroeconomic factors, etc. So we won't delve into that at this stage. From my perspective, I think on the large cap side, the two stocks I believe should do very well are ICICI Bank and L&T. Both are coming back from a phase where they had issues related to growth. ICICI had issues related to its balance sheet. Even L&T had issues related to its balance sheet. And now growth is coming back, balance sheet issues are getting resolved, and valuations are still cheap relative to growth prospects at a time when overall market valuations, we could argue, are still not extremely cheap because of the way consumer good stocks trade, which still trade at 40-50 PE, and that distorts the entire market price earning ratio. So I think from the large cap side, these two stocks I believe from here till next Diwali could give big positive returns to the tune of 20 to 30%.
That long term, Sandeep is betting on ICICI Bank for the next 1 year. So doesn't seem like a short-term pick or a short-term trade. He's bullish on it for the long haul.
See, I'm reasonably confident that the migration in financial has started. So money is moving out of NBFCs. Money will move to corporate banks. You have to understand, in markets you cannot focus on where the puck has moved. You have to focus on where the puck would move. And the puck has moved away from NBFCs. We all know that. But where the puck would move is what we need to focus on. And I think it's going to move towards corporate banks. They have ability to lend. They have cash on the balance sheet. The credit growth has been strong. And whatever market share NBFCs will lose because of tight credit conditions, somebody has to gain that market share. It's like PSU banks, they lost market share. Private banks, they gained market share. Private banks were not lending. NBFCs gained market share. Where will that market share again go now?
Yeah, but they have given a lot of heartburn to investors this last few months. But I know that the two gentlemen sitting here also are very bullish on ICICI Bank. We had the Chartbusters show and both of you were advocating the stock as your Diwali picks as well. Would you care to elaborate a little bit more, Dr. Narayan as well as Kunal, as what targets you're looking out for?
Well, I think we should be seeing a new high in ICICI Bank, and I'm punting for about 415, 420 as the likely target. That's about 20% up from where we are. So for a large cap stock, that seems to be a pretty decent target enough.
Kunal, your target?
So I think more than target, I think it's, what Reliance played in the last year, the leadership role, when the markets were volatile, you used to bank on Reliance, that maybe Reliance could outperform. I think that phase would now probably happen for ICICI Bank.
My
so
only
a target
fear,
of 440, 450 is possible.
3 months back that will be such a consensus
but
trade.
my only fear is that everyone is thinking on the same lines. I mean, there's only one sell report on ICICI Bank. 8 out of 10 funds are bullish on ICICI Bank. Now, consensus is great, but will consensus make money? That is something which I think will only unveil in next 12 months.
Thankfully, we have another option in Axis as well. That also seems to be the next consensus. But I know Ramesh Damani is waiting by. I'm going to ask him to hang in just a little wee bit. We also must recap the year gone by. And Jayesh from our research desk joins in to tell us how from the last Diwali to this we've fared. What have been the big gainers? What have been the losers? And where exactly is the street bullish on right now? Jayesh, a very happy Diwali to you.
Happy Diwali to you and all the viewers of our channel as well. Now, if you look at how Samvat 2074 has been, volatility has in fact come back into the market. But if you look at it in the global context of things, India did not do too bad. Because there were just few indices like the Brazilian index and the Dow Jones, which in fact outperformed the Sensex in local currency terms. And as you move closer back home in Asia, there are a lot of indices which have in fact underperformed. So the Nikkei, the Hang Seng, all of them have underperformed India as well. In fact, if you have a look, the Kospi and the Shanghai index, those are down about 15 to 20% since last Diwali. But moving on to the nifty gainers, what really made money, there was one pack which really stood out, which was the technology sector. So the top 3 gainers on the nifty were all the IT stocks. So you had Tech Mahindra, TCS and Infosys, which returned more than 50% of investor wealth. And you had Titan and JSW Steel also, which in fact made money. Now, if you look at the losers, there was one sector which stood out here as well, which was the OMCs, and you had HPCL and BPCL, which declined considerably. But the leader of this pack was in fact Tata Motors, declining more than 50%. And we had the odd Yes Bank and Bharti Airtel as well, which featured in this list. But overall, the wealth created, that was decent enough. Nifty in fact created 3.5 lakh crores, largely contributed by TCS and Reliance. And if you have a look at where the money was eroded, that once again, OMCs and Tata Motors featured in that list.
Okay. Let's take it across to Ramesh Damani then, member BSE. It's customary, as is this auspicious trading day of Muhurat as well, that Ramesh Damani joins into the ET Now festivities. And Nikunj, like in the US, they have the burger indicator, the Mac indicator. I think with Ramesh, it's the cake indicator. Because when I asked him, Ramesh, let's do a Diwali show. I know you're a great baker, but he said, Aisha, not in this kind of a market. The mood is so bad. So Ramesh, what is your cake indicator telling you now? Is the worst behind us, and are we ready to bake?
Aisha, happy Diwali, season's greetings to all you and all your viewers across India. I think, Aisha, it's been a very difficult year for markets because we had a very sharp, unexpected break in the markets. But you know, my sense is the way the market is behaving post that fall suggests that it was a break in a bull market and not the ending of the bull market. And the reason I say that is because the way the market is reacting to news, it is ignoring bad news. For example, Indigo came out with a horrible set of numbers and the stock is up 25%. It is responding to good news. For example, McDowell's came out with a fairly good set of numbers and the stock climbed 20%. A lot of stocks in the A group and B group have started making new highs. Now, these kind of things typically don't happen in the bear market. They happen only in a bull market. So I'm reasonably optimistic that the market will go back and test its original high of 11,700. Maybe not immediately, but over the course of the next 6 months to 1 year, there's a good chance that we'll make not only significant new highs in individual stock, but the index might go back and test its old highs.
I don't want to challenge your conviction, but I'm certainly curious that when you're optimistic, your optimism should be centered around facts rather than, rather than just hope. So, which are the facts and data points which are giving you this comfort that this is just a sharp and a savage bull market correction and this is not beginning of a bear market?
Excuse me, audio nahi hai.
Hi, Ramesh, is my voice reaching you? This is Nikunj from the Mumbai studio. Okay, I'll tell you what, I'll get him back. But right now, before I go to Sandeep Sabharwal, I also want to bring out what we are calling it as the real RWI moment or the RWI champion. For us, the RWI champion, at least in last Samvat, has been the Aam Aadmi. And when I say Aam Aadmi, the SIP investor. And look at this fantastic data. It's very, very, it's very, very heartening to see that up until now, we've had this one-sided view that foreigners will only buy Indian stocks and Indians will never buy equity as an asset class. But 1 lakh crore, over 1 lakh crore was committed by domestic investors into equities both via the SIP and the lump sum route. So for me, if I really have to mark out a RWI champion, it really has to be the SIP investor, and it's very, very heartwarming to see the kind of commitments SIP investors have had in this kind of a decline. Sandeep Sabharwal, it's good to talk about SIP, which will give you return in long term. But now, the 1 year SIP investor, the 1.5 year SIP investor is not feeling very happy about their asset allocation. So what is looking good could turn adverse if markets don't move up or if markets go down.
Yeah, so I think typically being from the mutual fund side for a very long period of time, what I have observed is that investors will typically start panicking when their overall portfolio becomes minus 20%. So I think that's the time they start thinking that whether we made the right decision or not. So I think SIP investors are not at that stage as of now. And my guess is that given the maturity which has come through in terms of investor education, these SIP flows will continue. And I don't see a significant acceleration. So I don't see this 8-10,000 crores going to 20,000 crores anytime soon. But I think a range of 7 to 10,000 crores broadly of flows into Indian equity should continue at least for the next 1 year. And even after one year from now, if investors see that they are not making returns and possibly fixed income without any risk is giving them more returns, that could be a time some of these investors will start rethinking. The second part we have to analyze is that we got 1 lakh crores from domestic investors, foreign investors pulled out around a similar amount, maybe 20,000 crores lesser, and that's been the scenario this time. So I think, but this will not continue. Eventually foreign flows will come back into emerging markets which are showing high growth, which India will, and we could see a scenario where we have contribution of money coming from both sides, and typically people who try to follow funds flow, they will become positive at that time. But I think we need to be positive now when we are seeing value in the markets.
Thanks very much, Sandeep. Good to have you with us on the channel, and thanks for joining in with your perspective. Let's take it right back then to Ramesh Damani, who we're in conversation with. And Ramesh, You know, you just spoke of levels of 11,700 back on the index, but I'm curious, what is giving you that conviction? Because I can think of 100 reasons as to why we may see more volatility or why there may be more nervousness.
Oh, there will be volatility, I almost guarantee that. But the way the market is fighting back, I think when the Nifty went to 10,000, it tested it maybe 2-3 times, and then you observe how technically the market is responding. For example, as I suggested to you, that on bad news, the stocks are now discounting it and moving ahead. For example, Indigo declared a very bad set of numbers, and yet the stock's up 20-25% from its lows. Stocks that respond with good numbers also finding favor with the market. Individual A group and B group stocks are making 52-week highs after the crash. Now that type of action doesn't happen in a bearish market. It happens only in a bullish market. So the technical evidence is pointing that at least we'll go back and test the old highs of 11,700. Maybe not right away, maybe in 6 months, maybe in a year's time. But I'm fairly optimistic that the bull market that began 5 years ago is still intact.
Okay. Ramesh, so I don't want to get this one wrong, and it's a very important message which I think you are trying to communicate to our viewers, which is that one should not get scared of this fall. In fact, it is time to get greedy, right? Am I using the right words? It's time to get greedy and participate in this fall?
I don't know about that, but these are tough words to tell to a public audience. But my sense, Nikunj, respectfully, is that in this crash, everything's been painted with the same brush. Everything has fallen 20-30%. And even in the mid-cap, small-cap space, if you look, you'll find some excellent companies trading at single-digit PEs. And there's no reason where the risk-reward favors you so dramatically over the next 2-3 years not to step up and buy. Would I get greedy about it? No. But as a rule, I'm generally fully invested in the market. So maybe that helps answer your questions.
Ramesh, you know, on every Diwali when we interact, you always very kind enough to point out 2 or 3 themes. You know, last time you pointed out aviation, you pointed out the QSR space, the so-called quick restaurant pockets. What is that is catching your attention? How are you approaching this market? Are you buying the same stocks bit more, or are you diversifying a bit more? What is there on your radar?
Nikunj, this is a hard question because I am going into the fall also. I was almost fully invested, so I didn't have a lot of cash. But I sold some of my old holdings and buying something new, buying some beaten down stocks, adding to my original holdings for some other companies. It's hard. There's no sectorial theme that I find overriding what I'm doing. I'm just looking individually at bargains. You know, I feel that at this time I'm doing a better job stock picking. So unfortunately, I can't give you an overarching theme that I'm buying, but I'm still sticking to the names of consumption, B2C companies, a little bit of petroleum companies, you know, sectors in that sector. Unfortunately, there's no overriding sectoral theme that I'm betting on. I'm just looking at the fall and seeing the bargains that the market is giving us. Single-digit PE stocks, handsome dividend yields, good earnings visibility over the next 2-3 years, those kind of companies.
Ramesh, you know, I find it very surprising that this current fall in the market has caught just about anyone and everyone unaware. The fact that everyone was invested in, no one saw this fall coming. I mean, why would you think that the indicators were that deceiving?
Is that question to me?
Yes, Ramesh.
Sorry, Aisha. I think there was some sense of complacency in the market. 4 fat years of a bull market make you fairly rich and overweight, and I think there's a sense of complacency. So I agree with you. I think the market caught a lot of the smart money napping, and that's unfortunate because we should always be aware of the risks in the market. But I think it was probably a sense of complacency after 4 very good years in the market.
Then I'm very curious as well as to what exactly you would invest for family. If we had to say, here's a portfolio that you can create for your grandson, what is it that you would allocate?
You know, clearly, as I mentioned the last time we chatted, the QSR theme looks good playing out over the next few years. Asset management companies will do well over the next few years. You know, some retail will probably do well in India over the next few years. Unfortunately, at this particular time, there's no overriding sectoral theme that I betted on, but I bet on individual companies that have fallen 30, 50, 70% in this fall. So I tended to, you know, do stock picking this time more than an overall theme. So unfortunately, I can't give you a particular theme. Generally, I'm looking among the rubble of the market, seeing where the bargains are, where I find optimistic about the company's prospects and buying them.
Ramesh, quickly, you know, our interaction is 90% or 95% centered around markets. What is looking good, what is not looking good. Let's talk about how life has changed for Ramesh Damani over the years now. You become a grandfather, you're chairman of DMart. So what's keeping you busy these days?
That's a great question, Nikunj. Thank you so much. I think I think at the end of your life, when you look back at your life, you want to make sure that you did good as best as you could. And, you know, there are some individual desires that we have to be, say, touched by greatness, to be, you know, more than what we are currently. So hopefully over the next few years, I will continue to help people, continue to do good, continue to teach people about investing, which I love, but also try and find time to, you know, become larger than myself. As I say, to try and leave a legacy for which my grandson may be proud of. It's very important to me that when he looks back on my career, he can pick things up which he would admire, because I think at the end of the day, we are all fascinated by our next generation, and I hope I can reach a good, honest legacy for my grandson.
Okay, and I'm sure little Veer will be proud of his granddaddy. Wish him and your entire family as well, Ramesh, a very happy Diwali.
Thank you guys, thank you for a great job, and happy Diwali and season's greetings to all of you.
Thank you so much. We've got to take a quick break. The Muhurat Trading has held out quite okay. We've made it to that 10,600 mark in the Nifty futures. It's a good breath. I only hope when Friday, when we come back to trade, the same rates would be replicated. Quick break. When we come back, Sunil Singhania as well joining in to tell us about what he feels is investment worthy.
Well, in case you just tuned in, wish you a very happy new year, a very happy Samvat here. Last 12 months have been challenging, they've been volatile, they have been literally all over the place, but that's the nature of the equity. The sense which we are getting from everyone is that don't lose your SIP, don't cut your SIP commitment towards equity as an asset class, but be prepared for volatile days. You got to fasten your seat belt, because what we've seen in last 3 months may not be the reality going forward, but what we've seen in 2017 and 2016, which is like linear return in small and mid cap stocks, that's also unlikely to be repeated. But when it comes to investing mantra, whether it is Buffett or whether it is Ray Dalio or Mark Mobius, the investment mantras don't change even though geographies they change. And one of the Buffett prodigies always has been Munish Pabrai. Now Munish is joining us today on this Muhurat Trading Day. Munish, first, thank you for joining us and wish you a very happy Diwali. So Munish, since today it's Diwali, let's have a little bit of fun. You've always said that if you want to be a successful investor, one needs to just understand and study the way how Buffett has invested. Just clone him. So today, Munish, what we've done is that we've taken out some of his wonderful quotes, and I would request you to apply the essence of those Buffett quotes into India. So the first one, Munish, which we want to start with, and which is one of my personal favorites, is that you should buy a business which even a fool can run, because one day a fool will run it. How does that apply?
Yeah, well, first of all, I'd like to wish everyone a very, very happy Diwali. Hope everyone has just a wonderful and prosperous year ahead. And the most important thing is that I'm asking Lakshmi कि आप सबको छप्पड़ फाड़ के देना, क्योंकि अभी लास्ट फ्यू वीक्स में थोड़ा ले लिया है, तो अभी देने का टाइम आया है. So thank you.
So, Munish, but how does one really apply that Buffett quote? That's my question.
Well, I think what Warren is talking about is he's talking about, let's say, almost indestructible moats. So if you look at businesses like Coca-Cola or MasterCard or Moody's, or like in India, CRISIL and such, these are businesses that are almost impossible to destroy. And in fact, some of these businesses, like Coca-Cola is a good example, where for decades they've been run by subpar managements. But those subpar managements have not had an ability to take down the business. So there are very few businesses like that. But we as investors ought to be looking for businesses which would do well even in the face of mediocre or poor management.
Okay. Manish, so does Buffett's quote of buying the greed, selling the fear apply in Indian markets as well, which is in the midst of a correction and just so much volatility and haziness ahead of us?
Well, I think what Warren is talking about is he's talking about, let's say, almost indestructible moats. So if you look at businesses like Coca-Cola or MasterCard or Moody's, or like in India, CRISIL and such, these are businesses that are almost impossible to destroy. And in fact, some of these businesses, like Coca-Cola is a good example, where for decades they've been run by subpar managements. But those subpar managements have not had an ability to take down the business. So there are very few businesses like that. But we as investors ought to be looking for businesses which would do well.
Right. Maurice, you made that point with that example about Coca-Cola, but Buffett also says that invest in a way that even if the markets shut for 5 years, then you should be comfortable. Is it possible to apply this really in practicality?
Yeah, because it's contrarian. So the best approach in investing, like Warren says, to be fearful when the world is greedy, and be greedy when the world is fearful. So we are participating in auction-driven markets. By definition, auction-driven markets go from being extremely undervalued to extremely overvalued. And when they become undervalued, that's when we want to be buying. And when they become overvalued, that's when we want to be selling. And human nature is generally has difficulty with doing that. But that's why that's what we have to do to make money.
All right, stay with us, Manish, because we have lots more questions to quiz you about regarding not just Warren Buffett, but your outlook on the markets as well. But time to shift gears on this auspicious occasion. Everyone looks to commodities as well as a valuable asset class to invest in. My colleague Mubina Kapasi now joins in to give us a sense as to how things are shaping up in the commodities universe. Happy Diwali, Mubina, and what's the latest?
Well, happy Diwali to you as well, Avan. Well, I think they may have finished their buying in the last 2 days prior to Diwali, in the run-up to Diwali with Dhanteras, because today the NSE's gold and silver contracts are looking a little subdued. Silver, in fact, for that matter, is losing close to 1%, while gold is more or less flattish with a negative bias. But again, contracts quite high, almost 80 contracts traded in silver and about 160 contracts traded in gold so far. So not bad at all. It's been about half an hour into trade. The other factor to consider is that we have seen these losses come by on the screen after 2 days of very smart gains, and again backed by very heavy volume. So today we are seeing a bit of red on the screen. It's about 0.9% gone for silver. For NSE's gold 1 kg as well, it's gone by about 0.1 odd percent. But for NSE gold 100 milligrams, there are not many contracts traded. But that too is showing signs of red today in trade. Do remember, however, international gold prices have a lot to watch out for. Firstly, of course, being the midterm election results, wherein the House is given in favor of Democrats this time around. And that is something that caused international gold prices to rise up, as investors did want to flock away from uncertainty and from volatility and sought to look at safe haven assets. So it went off, international gold prices went off their 1 week low. So there the QC seem to be good, but of course for the NSE's gold and silver contracts, I suppose much of the buying was done in the last 2 days, and today we are seeing a bit of red on the screen.
Thanks, Mobina, for that. Internationally we haven't seen the gold prices moving much, but it's because of currency. The Indian gold prices have been doing pretty well, and in last 1 year has given returns in line with or probably better than equity. Taking some more cues from market today, there are a couple of stocks I want to highlight: Manappuram Finance, South Indian Bank and Voltas, where volumes are comparable to normal day volumes. So something buzzing over there: Manappuram, South Indian Bank and Voltas. Let's take some more trading ideas, and this is not just for today's trading session but for coming 1 week. CK, Container Corporation has seen a decent up move in last trading session also, and we did see a decisive move above 200 DMA. What are your observations when it comes to charts? Why are you giving a buy call over here?
Well, I think Concor's recent moves have been pretty strong, I would say, to put it mildly. It's really leapt off the base and then has simply kept going. And even today we can see that the stock is holding its own and trying to push up ahead. So I would believe that buyers are still at work in Concor, and this is not a frontline stock. So if it shows this sort of resilience, I think it's an indication that more longer term oriented players are into the stock, and that's why it's a buy in my books at the current levels for the short as well as medium term.
Kunal, we are talking about banking space doing really well, but it's not just private sector banks or PSU banks. Even this mid cap names like DCB, South Indian Bank, case in point today. DCB, in fact, last trading session gave a decent upside move. What are your observations on charts over here?
So relatively, it's an average performer as compared to most of these other mid-cap banks, Siddharth. But off late, the chart patterns have become very encouraging, because you've seen price appreciation, like we've seen for most of these mid-cap banks. But there's strong price patterns as well, and those price patterns on short-term, long-term charts indicate that the stock could break out quite convincingly. So that's the reason for suggesting a buy. 175 is an immediate target which I'm eyeing on the stock. Stop loss could be kept at 160, 161.
Manas, just when everyone anticipated that probably the up move in IT companies is more or less done, TCS, Infosys, these stocks are showing new signs of up move. What are your observations? Why TCS is a buy for you?
See, Siddharth, many IT stocks are looking strong on the charts: Wipro, SCL Tech and TCS. I think if you want to play in IT, then three stocks you can in three stocks you can create some long position, and especially TCS, because we saw some correction in last two trading sessions, but yesterday again at lower levels we saw a lot of buying interest. So I feel this time it can break its 50-day moving average and it can go up and test 2050. So here I think positionally one can create long position with a stop loss of 1880.
Okay, let's move forward. Let's talk to Sunil Singhania, founder at Abacus Asset Management LLP, and find out about his view on the markets right now. Sunil, firstly, wishing you a very, very happy Diwali, and your entire team at Abacus as well from all of us.
Happy Diwali, and wish you and your viewers a great year ahead.
Okay, so Sunil, exactly on that point, will it be a great year ahead? Because this is our wish every Diwali, but from last Diwali to now, it's been a bit of a rough patch. Will it be great the year ahead?
See, I think we have over the last so many years seen so many challenges, and it has always paid to be positive ultimately. So obviously, we have had a lot of challenges. If Diwali would have been 15 days back, I am very sure the views would have been so much negative. I think things have dramatically changed over the last 15 days, and almost all our headwinds and challenges are slowly getting resolved. Obviously, we have a big challenge coming up, which is the elections. But other than that, whether it is the macroeconomic factors, whether it is oil, currency, US elections, NBFC, liquidity, they are all behind us, more or less. So we will get there, and as long as the economy grows, returns will definitely be made in the Indian equity markets. I have no doubt about that.
Sunil, hi there. Good evening and thanks for joining in. Investors have also burnt their fingers when it comes to the NBFC space, that IL&FS news, etc. But you've categorically said that within this sector, you're positive on select NBFCs, particularly the gold finance companies and housing finance companies, which have a balanced ALM position. Would you care to throw more light as to how investors should really approach this space and give us a sense as to whether there are any specific names that you like, say a Muthoot?
So one is, you are right that select NBFCs definitely look great, and I would say investors who want to invest, they would be fortunate to get this kind of reactions. They were the darlings of the equity markets, and suddenly almost all the good NBFCs are down like 25 to 40, 50%. We have to also understand the dynamics of the Indian economy. The overall exposure of retail to any kind of loans is like 10%. Mortgages have maybe a 20-year structural opportunity, and in a sense, what has happened due to this short-term, upheaval is that good NBFCs and well-run NBFCs, in fact, would start to gain market share. So I would, say that good housing finance companies which have low exposure to developer loans. I specifically mentioned gold finance companies because these are companies which have very short duration loans, so there is no asset liability mismatch. Plus the ability to pass on any cost increase is very high there. You would also have select vehicle finance companies, predominantly commercial vehicle finance companies is something which we like because we do believe that there is a structural uptick there. So I think that there are a lot of these, NBFCs within the overall financial services space. In fact, I would say that non-fund based NBFCs, whether you have some wealth management companies, select other sort of financial services companies which are indirectly connected to the equity markets, I think they also look, worth considering at these levels.
Sunil, happy Diwali again. Nikunj also joining in. Sunil, the pond where you fish or the space where you hunt essentially is the semi-mid cap, semi-large cap and the mid cap space. In general, do you think one should not run away from mid and small cap stocks? Because a year ago, everyone thought that mid cap stocks, buying mid cap stocks was like buying gold. Now everybody is saying that if you're buying mid cap stocks, you're buying actually rusted iron.
So Nikunj, you have answered your question yourself. I think when the consensus is on one side, you know what to do. Just to give you some data points, January to March, large caps outperformed both the mid cap and small cap. April to June, again the same thing happened. July to September, again the same thing happened. But things have changed since 1st of October. Since 1st of October to date, mid caps and small caps are outperforming the Nifty by almost 4 to 5 percentage points. So obviously, we have had a major sort of a downtick. I would say that we are done with it overall. However, it's more a stock specific kind of a scenario when you invest in mid and small cap. In this quarterly numbers, we have seen sort of a two-tier kind of results. One set where the results have been very disappointing, but there's another set where the results have meaningfully surprised on the positive. Because of the general sentiment against mid cap and small cap, there is an opportunity there, and I think that is where at least my view would be that alpha would be created. On the large cap side, again, the stocks are changing, or the subsectors are changing. When everyone was avoiding IT, it is IT sector which did very, very well. I would say that every investor is now clamoring towards the retail side of the banking. My view would be that well-run corporate banks have already started to outperform, but for the next 1 year, they should definitely outperform.
So if you have to compare, Sunil, the current market, like we say in market that it always follows a cycle. We saw a similar kind of a correction in the previous bull market also. I remember, meeting you in a previous avatar, we went out for a coffee and you said, look, all bull markets correct, and that actually happened in 2005 or 2006. So when we will look back and analyze this correction, do you think in hindsight this will turn out to be a buying opportunity? Pardon me, I'm asking you very basic questions because those basic questions I think need some answering and some searching this Diwali.
Yeah. No, corrections always keep on coming, Nikunj. The only, I would say, sort of a disclaimer is that this time, despite the correction, stocks are not at a throwaway price. They are cheap, but they are not at a throwaway price. So I think we have to be careful that, we are not looking at a market where you can triple your money or quadruple your money in 2 years' time, which happened between 2013 to 2017. This is a correction. Stocks which were significantly overvalued have come to fair value. They have not gone significantly below fair value. So I think to that extent, your return expectations from here on should be in the moderate, teen to maybe a high teen levels. It's not a correction which has led to stocks trading at 3-4 PE, because the correction has come from a very, very overvalued kind of a scenario. So I think that is the only difference in this correction. But yes, as you rightly said, all corrections give opportunity. And this correction has also given an opportunity.
Sunil, but do you get a sense that when we're looking at corporate banks, it seems like everyone seems to be advocating a lot of these names? Does it look like it could potentially become a crowded trade?
Can you just repeat it again? I missed the first part, sorry.
The view on corporate banks, it seems like everyone on the street seems to be advocating them. Do you sense that it could become a crowded trade?
I think over the last 1-2 months, yes, there have been people who have been advocating it. But when you see the holdings predominantly of institutional investors, whether it's be mutual fund or foreign investors, you would see clearly the tilt is towards I would say non-corporate related banks. So it is still early to say that it has become a crowded trade. I would say that the surprises which can come in, hopefully, over the next 2-3 quarters would keep on surprising. And they are cheap even now.
Okay, good to hear that. Not a crowded trade, not just yet, although that seems to be on everyone's buy list, ICICI Bank as well as Axis, and especially after the Clarity post their numbers. Sunil, good to chat with you. Thanks so much for joining in, and happy Diwali once again.
Thank you.
Okay, quick
Happy
break
Diwali.
on that
Thanks.
note. When we come back, lots more Diwali dhamaka lined up, and of course later on the show we are going to be also chatting with none other than Saif Ali Khan, find out what his investment mantra is.
Welcome back. Thanks so much for staying on with us as we are looking and stepping into the new Samvat 2075. By the way, it's pretty much status quo on the index at that 10,600 mark. The broader end of the market started off, is ending where we started off, but there's 49 stocks which are in the green on the frontline index. But we've been getting you market opinion from some of the most coveted market experts, and now let's connect with some global voices as well and hear out Mark Mobius, founder at Mobius Capital Markets, as to what his outlook is on the road ahead for the equity markets as well. And let's get him in as well right now on the show. Thank you so much for taking time out and joining in. Mark, let's start off by talking about where India stands right now. It's been a roller coaster ride for the Indian equity markets, but how are we sitting in terms of the emerging market pack vis-a-vis the developed markets as an investment landscape?
First of all, happy Diwali. I think the celebrations are going to go very, very well. And when you're celebrating, of course, you have fun, but also think about the future and what your goals are for your investment future. And one of the most important things to remember is that India is growing at a fast pace. There are tremendous opportunities, and we think there's going to be quite a lot of opportunities for investors in India.
So what is your mantra to share with the followers in India, and how can they really keep their portfolios in the best shape?
Yes, of course, we have to be realistic when we look at oil. In dollar terms, it's getting more and more expensive. Of course, when prices of oil go up, more production is generated because many of the marginal fields come into play, and $100 is a pretty good price for many of these fields. So I believe that there will be, of course, fluctuations going forward, but $100 is probably a reasonable estimate of what we see. And of course, this will have some impact on India. But the good news is that India has alternatives. There's wind, there's solar, there are a number of other opportunities for India to produce power.
Okay, Max, since we have you with us, why not a message to our investors watching our Diwali programming as to how to keep their portfolios in best shape, and what really should they do this Diwali?
I think the key is diversify. Don't put all your eggs in one basket. Diversify yourself not only across companies in India, but across the global markets. You must remember that India is just one country of many, many countries around the world, and no one country will be always the best. You'll see in any table showing the best performing markets over the last, say, 20 years, no one market has been the best in more than 2 years of all those 20 years. So you have to diversify.
Mark, lovely advice. Thank you so much for joining in and giving us that perspective on the Indian equity markets. Well, it's very colorful here in our studios. There is, but there's not that much fervor as we're seeing on the frontline index. Nonetheless, on this auspicious Muhurat trading sessions, as we have just a couple of minutes to go to wrap it up, there is a lot of green on the screen. So 10,600 I think is where we close. There's a whole host of stocks that are leaning toward the gaining side, a healthy breadth, and 250 points up on the Sensex, with the mid and the small cap indices closing firmly in the green. Lots of outperformers. The list of losers is quite extensive, and it's M&M which is taking the top spot there at 793. The oil marketing companies, which have been through quite a tumultuous ride of late, are holding out. BPCL and HPCL firmly in the green, giving it company as IOC. Vedanta is a standout performer, clutching onto 210. You've got UPL, Tata Motors, ITC, Hero MotoCorp, and Aisha, I think I'm going to just be reading out the entire list of Nifty 50 companies because they're all in the green today.
Yeah, they are. Infibeam is holding out. Manappuram, Muthoot is a stock that Sunil Singhania just talked about. So let's check in on that one as well. That also goes home 0.5% higher on Diwali day. A South Indian Bank, Apollo Tyres, Repco Home. These are the ones which have held out. I also want to talk about the pain points, because this Diwali, really you're thinking about the DHFLs of the world as well. So what is Diwan Housing up to? What is Indiabulls Housing Finance doing? These really have been the problem areas for the markets. About a 0.5% uptick, though Indiabulls, of course, has recovered quite a fair bit of ground from the lows that it hit about a month and a half back. 833 is where that stock is right now. You've also got Voltas, that goes home a loser. Strides Arcolab, Z, Hindustan Zinc, Taracom, these have all closed in lower. You're seeing a fair amount of OI build up in some of the tyre names. So Apollo Tyres, Balkrishna Industries, they all have held out okay. And I think Repco has been the strong one, along with the Bank Nifty, which is seeing some OI gains today. M&M as well goes home a winner, and OMCs like Avan was talking about. But I want to talk about the big Diwali bets that most of our experts have talked about. ICICI Bank, L&T seemed like a unanimous combo that just about every fundamental expert talked about. ICICI Bank, and this is indeed a fresh move by the stock, all the way up to 355 thereabouts. And L&T as well, which also seems to be a consensus call really. That will just come up for you on your screens next.
Well, some of the names have done really well volume-wise. Infibeam, you spoke, 3 crore 20 lakh shares getting traded on a Muhurat trading session. you can understand the kind of move the stock has shown, 22% up on that stock. And yes, Infosys, Tata Motors, these were some large caps which did pretty well for themselves, and we are just about to close. We have seen some of the mid-cap infra names like NBCC also doing pretty well in today's trading session. CK, unlike usual Muhurat trading sessions where we see a gap up opening and then profit booking setting in, we haven't seen that happening today, and market hold on to its gains, though we should not read too much out of it. But what are your expectations for coming 1 week when it comes to Nifty and Bank Nifty?
Well, I think one of the reasons why we didn't see what you just described as a normal feature is because there were in too many leverage positions which had got built up in anticipation of a higher price. So I think this high upside gap open actually took people a little by surprise. And but then moving ahead, I don't think there is anything on the horizon which should really spoil the situation for traders, as it were. And therefore, I do believe that the upside momentum that we have seen so far should probably continue. Maybe not in exactly the same vein like we have had across the last 5-6 sessions, but certainly a slow version of it is certainly on the cards. Any pullback intra-week would be a chance to buy.
Okay, and Kunal, IT names are doing well. TCS was a buy call from Manas. Infosys did pretty well in today's session, in fact doing pretty well. What's your feel when it comes to Nifty IT? You think along with Bank Nifty where you have bullish view, along with Nifty where you are optimistic, Nifty IT would also continue to do well?
So I think yes, I think the chances are that the Nifty IT should continue to do well. May not be of the same intensity, but these stocks which you're talking of, TCS, Infosys, and I would place even names like Tech Mahindra, Mindtree into that category, because all of these stocks are showing some extremely strong bullish formations on their short-term charts. And in fact, I think yesterday also we were talking about Nifty IT index, and I mentioned that there's an inverse head and shoulder pattern getting formed, spread across the last 2 weeks. So I think coupled with all of that reason, I believe Nifty IT should continue to rise up higher from current levels.
Okay. Manas, what about metal space? Because that's one space which has been, at least Hindalco, Tata Steel, these stocks have shown formation of long positions in last few trading sessions, doing pretty well for themselves. Yes, there has been some profit booking, but then overall trend seem to be positive. How would you approach metal index and some of the key names within that space?
That metal index has shown some sign of reversal recently, because last week we saw a sharp bounce back from the level of around 3250 to almost 3450, and now stock is facing some resistance in the range of 3500, which is its 200-day moving average, I believe. So now looking at the pattern, because two large cap stocks are looking strong on the charts. First is Hindalco and second is Tata Steel. I believe that this time it can break its 200-day moving average, and it can give around 5 to 7% up move. So if one stock I have to pick in this space, then it would be Hindalco, because even on the long term charts, I feel this is a consolidation phase, and after some more consolidation, you can see an upside breakout above 260, and if it breaks that, then definitely you can see almost 50 to 60 rupees up move in Hindalco. Even on the short term charts, I believe that it will attempt to test its previous high of 255 to 260. So even at current levels, I think one can create some long position with a stop loss of 235.
So that Manas, CK, everyone is bullish on ICICI Bank. You guys also have been talking about that. And while talking about ICICI Bank, Kunal made a very interesting statement that last year it was Reliance which was giving signs of leadership, or it did. This year it would be ICICI Bank. So what would happen to leader? What's your view on Reliance? Because that stock cannot be ignored even in this kind of market.
Well, I don't think the stock is going to allow you to ignore it. The way it has been moving, it's been very, very spiffy. And it's clearly taken back the baton, as it were, and has been moving up in the last several sessions. And I do believe that leadership qualities of Reliance would continue to be exhibited across the next year also. So if you ask me what is the next Reliance, it will continue to remain Reliance.
Okay, and one last question to Kunal. Kunal, you have been optimistic. You were saying that probably Nifty would move towards its 200 DMA. Give us viewers that what levels one should watch out for when it comes to the downside, that below this level again the texture of this market would be like converting from buy on dips to sell on rise.
So I would keep it short, Siddharth. I believe that first we should try and hit that 11,000 mark, I think in the next one month odd. I think that's my, very strong, reading on the charts before we try and test that 10,000 mark. So I think on the Nifty, the near-term charts are extremely bullish, and that indicates that you have another 400 points to climb from current levels.
So you're saying first 11,000 and then 10,000?
Yeah, then maybe 10,000 the correction continues.
That's interesting, Aisha and Avan.
Yeah, but we're also watching out for that level on the screen right now. Not only you, Kunal, that 11,000 coveted mark for now. Of course, 10,600. I think it's a comfortable close, safe to say, for today's Diwali. But Nilesh Shah has been patiently waiting by as well. And Nilesh, I'm sure a lot of our investors want to know, in this market environment, which is that one sector bet that you will take for the next 12 months?
So there is one big theme which is emerging. There is a tariff war going between US and China. There are many companies who have manufacturing plants in China, and because of imposition of tariff by United States of America, they are finding it difficult to export goods to America. Now, those are the sectors, those are the opportunities where Indian companies can make an inroad. There was an article by economists which talked about computers going to Taiwan, electronics going to Thailand and Malaysia, clothing going to Bangladesh, food processing going to Vietnam, and footwear going to Cambodia. Now in India, we do make footwear, we do make clothing, we do process food to feed 1.3 billion people. We can also make some electronics, and we can also make some computers. Amazon and Walmart, the two largest buyers of Chinese goods, are present in India, not in China. Clearly, if we work with that ecosystem, this disruption of supply chain management through US imposition of tariff can create huge opportunity for Indian companies. We are thinking this is Y2K opportunity for Indian IT company equivalent. If we capture this supply chain disruption, the companies will become manufacturers to the world, and their growth will be superlative. So we are trying to find out which are the companies which are trying to take advantage of this tariff war.
Right. Nilesh, one last question on this occasion of Diwali. What is the advice that you will give to the viewers on asset allocation, disciplined investing, and would you say that that is the key for wealth creation, irrespective of what the market is up to?
So one, my advice to investors will be disciplined. This is the festival of Lakshmi Mata. We all pray to Goddess Lakshmi to, favor us. The wealth creation can happen through long-term investment, regular investment, and asset allocation. And it all requires discipline. Discipline to stay invested for long-term. Discipline to ignore market volatility. Discipline to continue doing regular investments even when returns are moderate or negative. And most importantly, balancing your fear and greed. I pray to Lakshmi Mata that all Indians become wealthy and prosperous following this time-tested principles. In terms of allocation to equity, well, one have to take a call based on individual risk profile and their investment objective. There is no one standard fit for a person, but the thumb rule is that 100 minus your age is your allocation to risk assets. And risk assets does include equity. So go and consult an appropriate financial advisor who can draw a roadmap as to how to invest in various asset classes, not just equity. And once the roadmap is drawn, looking at your risk profile and your investment objective, please adhere to it. Thereafter, Lakshmi Mata will surely bless you.
And we wish those prayers do come true, Nilesh. Thank you for consistently advocating the simple principle of disciplined and regular investing. Great to have you with us. On that note, tell you what, let's take a quick break. But Aisha, on the other side, we find out a lot more about Saif Ali Khan, about his equity investments. I'm sure you don't want to miss that. Stay tuned.